Yeah, he's a master class in conviction and maybe manifestation too, if you're already
For
prepping for
real.
your documentary about yourself years in advance. That was a wild one, though. I enjoyed it. So I want to get back on topic here. You said you came from TradFi before you got into the Bitcoin space. It's a tale I hear very often when I talk to people on this show, and I love to kind of understand more about what was your, that phrase, your orange pill moment. I want to make a graphic where I go like, orange pill moment or something like that. What was that for you? What was the moment that you realized that this was much bigger than maybe you initially thought it was going to be?
Yeah, yeah. I think the biggest thing was when I first had been introduced to Bitcoin, people referred to it as blockchain technology, and that just wasn't something that ever
Mm-hmm.
really got me interested. From the perspective of somebody who comes from the investment world, um, when you hear that, you're like, okay, so it's this new technology, and how do I value it? And everybody in finance is trained to value things from a framework of some form of securities analysis because that's pretty much everything we've invested in. So everybody, and that means that you look at the value of something based on cash flow that it produces in the future in some way, shape, or form. There's a lot of jargon and different types of ways of doing that. And so from that perspective, when I heard blockchain technology, I'm like, oh, here's this technology that doesn't produce cash flow. So it wasn't really that I like hated it. I was just like, I don't know how to value it, and that's kind of
Mm-hmm.
not the type of investing that I do. From an economic standpoint, I understood central banking and the issues caused by central banking. And that was just something I was pretty nihilistic about. I was just like, this is the way it goes. Some people invest in gold. I invested in gold, and that's good, but it's really not solving the problem. It's just kind of like relieving some of the symptoms in the short term. And so there was no like cure that really existed. And then the first time I heard, oh no, Bitcoin is an alternative to central banking, that's what got me really interested. That's what sent me down the rabbit hole, and I
Mm-hmm.
started spending a lot more time because it's not really that the way of valuing something was changing. It was that the water in which we're doing all this value, the water that we're swimming in is changing. And
Mm-hmm.
and it's a new paradigm. So that got me very interested. And I spent some time like learning more about crypto. And it took me like a year to really come back around to the idea of like, okay, Bitcoin is really the only thing that's fundamentally changing that thesis. And that's the whole, that's the meat and potatoes. That's the whole thing that we're doing here. Um, so Bitcoin was really the only thing that I cared about from that point on. And I never was like, all of crypto is a shitcoin and I think everything's going to zero. I definitely think that like best case scenario, some of these are valued as like software companies. And while that's interesting, it pales in comparison to what's happening with Bitcoin. So I'm going to focus everything on what I'm doing in Bitcoin. And then the kind of question around why I built EPOCH is related to some more complexity kind of around that. But yeah,
As somebody looking to invest in companies, or as in VC, we know it's a notorious space for FOMO investing. You see it all the time, which begs the question: how do you resist chasing, shiny altcoin projects when they pump, and instead you're sticking to the Bitcoin is not equal to crypto mantra? How do you stay focused on that when there's all these shiny toys popping up all the time to make sure you're investing in sound long-term projects as opposed to the next fad?
yeah. Um, It's really hard from like we don't view it even as much as like Bitcoin versus crypto from that angle. Like a lot of that's
Mm-hmm.
resolving in the market right now. If you kind
Yeah.
of look at now that crypto's not going up nearly as much as Bitcoin's going up, it's like washing out a ton of that market, and some of it's probably going to remain for a long period of time. But the whole like original thesis that made that so compelling, uh, and that was pretty much when you were able to issue this token that would go up a ton in value out the gate because everybody was speculating on it years ago. It made it really hard to be a venture capitalist in the space and not do that because you would get returns so quickly for your investors. And like basically before tokens, venture capital was this industry where, and still is today, but th this industry where it's really illiquid to the point I was making earlier. So you need to have high returns to capture that benefit for your invest or that cost for your investors. Say, okay, we're doing this really illiquid investment, but the returns are going to be so high that it's going to be worth it. And and the model kind of changed for these funds that were investing in tokens because like not only do we get to do these early stage companies that are in the private markets like this, but now we have kind of like a public market way of monetizing this, and we can do it in like 6 months. And then that created this perverse incentive within the industry. They're like, well, we don't, the whole goal is to get returns, and we can kind of get that from like pumping the value of the token and not actually creating a valuable
Mm-hmm.
company. And then the pump and dump token scheme started to be really pervasive. And there were like funds that were
Yeah.
posting really high returns for a period of time, and then a ton of them got burnt and all closed up shop because that, the music stopped. And so now that that's kind of happened, and like there's this show called The Gord Show, and he had this tweet where he was just like, I think retail investors learned too much last cycle. And like that's the best way of like framing what happened in crypto is like everybody's got smart and realized like this isn't a sustainable thing. Um,
Yeah.
so it's good that like we don't have to compete against that because it would be a lot harder for us to raise funds and a lot harder for us to justify our investing when that's happening alongside us. Um,
Mm-hmm.
but I think that what's kind of shifting now is that it's a lot easier for us to focus on Bitcoin without that. And the realities in the market are starting to shape up where people are realizing, okay, so Bitcoin is kind of the major innovation here. Um, and then on the software side, like a lot of the more like, reasonable ideas that emerged in crypto, those are being replicated on Bitcoin and not using a token, but using Bitcoin as the token. And
Mm-hmm.
that's what a lot of people are realizing is like, okay, this whole value of the token is basically just like a more liquid form of trading something, or it's through money. And if we're using money, then we should basically just use Bitcoin and not try to create our own money. So the idea that you can create your own money for whatever type of software company you have is kind of dead. And that
Mm-hmm.
means people are just going to be using Bitcoin as a form of money or something like a stable coin, which is more what like, corporate institutions are doing right now.